Hey everyone, hopefully you're having a good day. I've got Steve and I've got Scott. They're from Sow N Reap Capital. So thank you guys for coming on the channel. Really appreciate it. What we're doing here is we're going to start talking about uranium. We're just kind of, I guess, free ball it and talk about whatever we want to talk about. We're going to share some technical charting. Scott's got some stuff he wants to share. I'll talk about some things as we go along. As you can see, I've got a new background. I've got cheetahs in the mix. That's what that means. And I know a lot of people probably have questions about it, but on the channel, we talk about cheetahs. They get stuck in these resistance containment areas. Once the door opens, we break through and then we run. And hopefully this is the beginning of that run in uranium. So that's kind of one of the topics we wanted to talk about, uranium. So I'll direct it at Scott first. I know he wanted to share some things. We were talking about uranium, a couple weeks ago, or a month ago. And one of my sayings is, there's a lot of panic sellers and I panic buy, I guess. But I think Scott wanted to share this. I thought it was kind of good. So what do you have, Scott?
Yeah, so this is a video that I did with you, Andy, on the 30th of April, and we were talking about CCJ chart. And basically what we said was, this is a monthly chart of CCJ. And we said, if it dips below it and scares people, that's when you should be accumulating. That's kind of what you said, Andy. So we basically pointed out, this is a level, critical level for me. Maybe we see a little bit of wick below. And then you said, even if it goes a little bit below it and dips below it and scares people, that's when you should be accumulating. So what do we see in CCJ since then? So let me just go to the CCJ chart and just go back to the monthly chart. Here we go. So that's exactly what we saw. This was the critical level that we drew in, basically. Because of the monthly opens and closes around this level, we put on a wick below, create a hammer pattern, and then now we're going up. So for me, this looks like just a back test of the breakout area. So for me, this was the breakout. For me, this is also a back test of the monthly big line of support going across, and now we're starting to go up. So hopefully, fingers crossed, this is the cheetah mode. Hopefully, so that's what I'm seeing. Another thing that we saw. Sorry.
Do you know why I said that? Why do you think I said it was going to dip and come back up? Probably because if you look to the left, or I don't know if my left, whoever's right or left, but there's a bunch of support right underneath it. So a lot of the times you dip into that support region, it'll slow down, stop, and then reverse and come back up. So if people are looking to say, hey, look, I want to buy in uranium, what you want to do is you want to buy when everyone's scared, but you're coming into support. That's like the perfect time to be, getting greedy when everyone's fearful. So the saying goes, when people are panic selling, you should be buying. I call it panic buying. I just made that up. But it's just, you buy into off those support levels. If you've got the ratios and we're in an energy crisis, we have all the tailwinds. Natural gas was going higher. I mean, that's the time to be sticking your neck out a little bit and buying and trying to catch bottoms and catch falling knives if you're going to do it, because you've got all the backing behind you. It may not work out sometimes. I mean, sometimes it works out, sometimes it doesn't. But
and it had a huge uptrend support as well for CCJ. If you look at this chart, and we discussed this in our videos earlier too, but we had this big trend going up like that. So you can't really ignore this trend line as well. So, it bounced right off support. So another reason to get in when everyone's scared. And so we talked about Benjamin as well the other day. Or this was actually, I don't know exactly when this was. So this was May 11th, I think. And so we made a comparison between Benjamin chart, which is above, and natural gas chart, which is below. And we said, well, the patterns look really similar because these shapes, like this is the circle area here. This is when the Livermore's bullish cylinder started. This is a first run up in natural gas, first run up in Benjamin. And then we had long consolidation, followed by another run to the top of the channel, top of the Livermore's bullish cylinder, which is the lightning here, and then natural gas had a dip below, came back up, had another dip below. That was the last opportunity to get into natural gas, and then we had a huge run up. And so with Bannerman, we said this looks incredibly similar. We're going a little bit sideways, dip below, coming back up, and then we dip below. And this is probably the last opportunity to get into Bannerman at cheap prices. Well, Bannerman is starting to look pretty good now. So if you look at Bannerman, it's started to turn around above, this trend line, and it's starting to go up. And hopefully we'll see it rocket higher and just follow natural gas's path that we've showed earlier. So that's what I'm seeing. I think all the charts look incredibly good. We've talked about many false breakouts or breakdowns in the uranium sector, and yeah, everything's coming back above now. Like even if you go back to the Uranium chart, for example, we had, even if you draw this conservative line here, well, we're now back above. We've never come back to test this low, but even if you draw something like this, that was a false breakout and we're back above. And what do false breakdowns normally result in?
These
slingshot
guys
cheetah mode.
These guys.
Slingshot cheetah is what I think is coming. So if you look at URA, this is probably a post that I posted a little bit earlier, I think a couple of weeks ago. And I said this was probably a false breakdown. We've now come back above, which means we've engaged in a cheetah slingshot mode. So all the charts are looking really good right now across the uranium sector. And hopefully we go into a parabolic move like we've seen in natural gas. We've talked about natural gas, but natural gas is looking really good. And it looks like we could be breaking out. So this is a beautiful looking Livermore's bullish cylinder for natural gas. And it looks like on a weekly time frame, we're breaking above the top of the channel, which means just to remind you what the Livermore's bullish cylinder looks like.
Yeah, this is where the party goes crazy. This is where
yep.
all that pre-gaming is going to pay off here, right?
Exactly right. This is exactly what we're waiting for in this commodities bull market. So once you break out of the top channel, this is when you start your parabolic move. And this is where it just goes all crazy. So I'm not definitely calling for a natural gas like breakout. I think it's breaking out. And if it's breaking out, like we could have massive gains in natural gas. And this party is just getting started. Like, I mean, people are saying, natural gas has run up so much, it's bound to come down, but I would disagree, because if you look at natural gas measured in gold, look at this. We're only just getting out of this basing pattern. Only just basing. We're only just getting out. Measured in real money, like this hasn't even started. We've got a long way to go. So all these
Scott,
energy plays.
You shouldn't show me patterns like this, Scott. I'm already got cheetahs next to me that are running, and like anything that breaks out of these long patterns that are basically adjusted for inflation. So what happened if you were to look at that ratio chart? There was a gigantic bull market in natural gas in the mid 90s, all the way that ended at 2000. Was it 8? I think, or 2006 or so, somewhere in that region.
So
So what it did is it peaked out, it came back down, it does another double top, and then it goes all the way down into a large bear market. We are entering a new bull market in natural gas, like a big massive one. So that bull market started in the early 90s and ended in the mid 2000s. But really it ended in the year 2000, and that was a part of the corrective phase in 2008. If you wanted to know, this is a new bull market that's starting, and this is going to be fresh legs underneath us for the cheetahs, and uranium's going to have, I mean, that's the competitor. So if this goes ballistic, like I said, like Goose, let's go ballistic Mav, and that's what I'm referring to in natural gas. And eventually what's going to happen is all the attention is going to switch over to nuclear and uranium. That's my take on it.
I think so. And I'll show you how similar the uranium chart looks. But I think with uranium, we're kind of sitting around here just before the breakout. I'll show you the uranium to gold ratio. Look at that. Doesn't that look similar? You
Dude,
got like the
that
three
looks
humps at the
insanely
bottom.
good. Because if you look on the right-hand side, you've got nice big candlesticks coming up and the small little down candlesticks. And that's the
Yeah.
pattern that I look for a continuation move to the upside.
And look at
That
the
looks
volume as
ridiculous.
well.
What this
Look at
is
the
telling
volume,
us is
the
that
button.
uranium is still ultra cheap.
Yeah.
So Steve, what do you have, or what do you want to, you can ask us questions too, or if you want to make some statements. What do you think?
I was hoping Scott would show us the intraday charts of UEC and Cameco maybe, and maybe Energy Fuels, because we saw price and volume precede the news again today. It was just something all three of us have talked about, you know, just you see so much in the charts and then the news is kind of the narrative after, you know. But if you go, you know, minute by minute and hour by hour, you saw, I mean, this stuff take off, and then a couple hours later we heard, oh yeah, there's going to be $4.3 billion coming into the uranium space, which is 13% of our industry's market cap. I mean, it's insane. So it's going to be pretty good.
Yeah, the one thing I noticed on that chart, if you notice the large up candlesticks and then the small leak off sellers, that usually, you know, precedes a large move higher. So it finished strong too. So it might continue into tomorrow if the buyers decide to show up.
Yeah,
and we'll see. The excitement and emotions are running high for a lot of people.
Volume is just crazy. I don't know if Nancy Pelosi's long yet, but I'm sure we'll find out soon.
Yeah, we should just check what she's got in her portfolio. Whoa, she's got uranium here, guys.
Oh, it's interest.
Yeah, she's got options too. That's weird.
Yeah. And this is one I think too we talked about as well. And the chart had looked pretty terrible, and then all of a sudden it didn't, and we were just like, oh, well, I wonder what that is. And then we found insider buying, and we're like, oh, $500,000 insider buy. I mean, that's a big deal.
Yeah, I got lucky. Well, my first purchase, because I cost average in, I first purchased and then I had a quick 40% loss on my hands. And then I purchased again, luckily at 18, it was like 1850 or so. I got lucky. It was dirty, I get it. And then luckily it reversed up quite hard. It put a little wick on the bottom. That's why I bought it. It was a reversal candlestick. It was either a wick or a bullish piercing. I can't remember which one, but I bought it there as it was coming back up, right at that bottom. So it looks really good though. It's a fantastic looking chart, and there's a ton of support on the left-hand side. That's why I wanted to get in that region, and I can't believe it made it down to where it did. So I guess it was panic selling when I know I had to panic buy some. I bought a good amount. I wish I bought more. Obviously, everyone says that, but
yeah. There's going to be short covering on this one. It's going to be pretty epic. Because there are some newsletters saying not just sell it but short it. And I was just like, oh.
Oh, really? I
didn't
know that.
Yeah. I don't want to out them, but yeah.
So when I sorry, go ahead.
Well,
I don't. That I bought it earlier. People like replying back saying, "Oh, you know, read my tweets around that you'll short it." I'm like, I don't think so. Definitely not shorting LEU. Like they're pretty much like the only licensed US player, like enrichment player. So I'm like, where do you think the money will flow?
Exactly. That's what this is called is a bear trap. And you're going to get hit by the slingshot cheetah in the face. So we'll see if it works that way. But it does have that nice little. I always see that fractal where it comes down and then puts that little V bottom type movement. It is a falling wedge as well. Yep, I think it looks fantastic. I wouldn't short it with your money, honestly.
No.
Yeah. And there are just so many false breakouts on this chart as well, and we've talked about this on your show before, but you've got this horizontal line going across, which has been very supportive, like resistance here, support here, and then you had a false breakout, now back above. That's cheetah mode, right? That's slingshot cheetah.
So I know we're talking big, like we're very positive here, but I like to remain grounded. It sure looks good. Sure looks good. I don't want to get everyone too excited where they just start piling in, which that's what you should be doing at the bottom there. But I mean, if you look from a big expansion, you know, like a big, I'll say a 50,000 foot view of that chart, if you kind of back way out, the fractals on this thing are absolutely ridiculous. It's probably one of the largest fractals. And what fractals are, it's a repeating pattern that happens over and over and over. And what we're looking at is the size of the pattern. And that's what I mean by the size of it. And this guy is just ridiculous in terms of the physical size of these patterns. And usually the size is a prelude to what could potentially come in the future. So what this could be is similar to basically a first wave. And if that first wave is a certain length, the third wave is going to be massive. So it's basically saying that we're probably going to, this company could potentially get into obviously the uranium enrichment business, and all of a sudden a whole bunch of business is going to be directed towards them. That's basically what it's kind of telling us through the fractal, like something big is coming. Or they're getting shorted to heck and we're going to see a massive short squeeze soon. Fingers crossed. Combination of both would be the best. But the drop and then the move up is roughly the same if you look. So if you look on the left-hand side, you can see that large drop earlier. Yep, that drop in there is the same way it came up. We hit that kind of resistance line, we pulled on back, and now I think it's looking really, really good for a pull higher.
And we've got this beautiful linear upward trend on your log chart as well. Like it's just hit it perfectly, you know, bang, 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 bang. Like it's just hit it perfectly, which means your next move projection, like assuming everything goes well, is pretty easy. Well, should be easy.
It's way up there.
Like let's say it just does something like this. I don't know, like it just all depends on the timing, but you know, let's say we get there, hit the top of the channel by the end of the year. We're talking about like potentially $300. Like just look at the chart. Like not saying LU is going to get there, but if you ignore everything and just looking at the technical aspect of this company, then yeah, we could. Like there's nothing that's going to stop it from doing that.
But what you fail to account for there is that's a Livermore bullish cylinder, and we break above it. It's possible though. It is possible.
I accept.
I know. I accept that challenge. I don't, and obviously, guys, I'm not calling for that. I'm not trying to say that that's the necessary case. What you do in investing is you identify the fractals, you identify the genetics of the stock, and you say, well, it could do this. I'm not saying it will do this. It could, and what could happen. It doesn't mean it will happen. It doesn't mean it won't happen. I'm just saying if you have a collection of a portfolio of all these ones that could happen and one or two of them hits, I mean, that's what you want. That is where the money is made in the massive scheme of things. So what other things do you guys or either of you have either questions or observations that you've made in the uranium market here recently, or maybe even the sentiment around uranium? You know, what have you been seeing out there on Twitter Space, and what have you been reading? Either one of you can respond if you have something.
Steve, go for it.
I just, you know, we've had terrible volumes, but over the last couple of weeks, the sellers were just exhausted. I mean, you saw the volatility just come to, you know, crescendo, and you know, Francis Hunt talks about that being a volatility funnel, right? And and you see it, and then today we had the volume break, and it's just like, okay, it's on. It's like a shot, Cheetah.
Do you think nice. do you think we'll have any pullbacks? Do you think this is going to be an easy ride higher? Do you think it's going to be absolutely face ripping, like we rip higher and then all of a sudden we get this massive pullback and it's just going to shake everyone all over the place to try to shake us loose from this bull market? What do you expect, or what do you think? And it could be just gut feel. It doesn't have to be anything.
I think we certainly could have a pullback, but you know, and other commodities, that's a big deal, and there's not really necessarily a floor. I mean, in housing, you have all these contracts that are 12 months long, or several mortgages several years long. So the housing market moves slow, but in commodities, they can move really fast. But the really great thing about uranium now, as opposed to last cycle or even just a year ago, is now we have ETF buying actively. It's a flywheel that goes into the spot uranium trust, and those pounds get sequestered. So even if we don't moon tomorrow or the rest of this week, they bought 300,000 pounds today. They've got $100 million cash. Like, it's going to be very hard for the spot price to go down. Could we pull back? Maybe, sure. I don't think so, but pounds are bought, they're gone. So we can't really lose. We could stall a little bit, but I don't think we go to really much further down here. So
What do you think, Scott? What's your opinion?
I mean, if I'm just looking at the charts, I mean, this is a pattern where you can come down and double test, retest. So what I'm talking about is, and I will get onto why I don't think that's going to happen, but just looking at the chart, just technically, if you look at like YCA chart, for example, this is a classic pattern. If you just put in the 200-day moving average, this normally what happens is you go up, you come down to retest, right? So, it went up, came down to retest, it went up, hit it at the 200-day moving average, went up, came down to retest, 200-day moving average, came up, retest, boom. And then now we're just like starting this move. However, like, this is a normal pattern that you will see. So I wouldn't be surprised to see this. But as Steve said, spot is right now holding on to $103 million in cash. Like, it's basically telling the market, you want to short it? Go ahead, buddy. We're going to buy it up. So I don't know who want to sell, first of all. Like, if you're holding on to uranium stocks right now, knowing that spot has $100 million in cash, over $100 million in cash, like, would you really want to get out before spot buys? Because as soon as spot buys, you know that the price is going to get pushed up. And with the shorts as well, would you want to short in the face of spot holding $100 million? Because, like, you're going to get stuffed over if spot goes long, suddenly goes into the market and buys a bunch. So I don't think we're going to see it. Like, I mean, that's the reason why I don't think we're going to see it this time around, because, and everyone's so bearish the market, everyone's, talking about the recession. So when people are most expecting another retest of a key support area, that's when it doesn't happen normally. So, I think this could be a time where we just rip your face off rally and just like never look back. And another thing that tells me maybe we're not going to do a retest is because we've had so many false breakdowns. Normally that means slingshot cheater mode. So there are multiple factors which tells me maybe we're not going to get this pullback, and those who wait for a pullback might miss out on this train. And that's why I don't try and trade in and out of this, because I'm just holding on, waiting for the parabolic move. So that's what I'm doing.
Yeah, my opinion is I don't really care. Like, it can slingshot now, it can pull back. If it pulls back, I'll buy more. If it doesn't pull back, I guess I'll just hold on and ride the train higher. So the path to me isn't as important as the destination eventually. As long as we get there, I don't really care what happens in the next month or two. If it pulls back, that's great. I'll get some more cheetahs in the portfolio. But again, yeah, like I don't know. I mean, a lot of people, they care about the path. They care so much about the path. They become wrapped up around the path, and they're wrapped up in this recession that hasn't even happened, and that doesn't have any indicators. I'm going to call it a ghost recession. We very well could have a pullback in the stock market. That is, I think that's a high likelihood. I think that's going to happen, and I think it will happen. How bad that impacts our commodities and uranium and all these other sectors, that is yet to be determined yet, because I mean, someone can look at the interest rates and say, well, every time interest rates go up, we have a market crash. Well, that's not necessarily true. It's when interest rates go up, they go sideways for a little while, and everyone's like, okay, this market is stale, it's ready to go. That's usually when it rolls over. But when we're actively increasing interest rates, that means the Fed, who is delayed, even thinks that inflation's a problem. If they think an inflation's a problem, it probably is a pretty big problem. So I always get bearish when the Fed gets bearish, and then I usually wait a little bit after that. And then what they do is they create, again, the guys, this is my opinion, they create some sort of retail buying moment where they get everyone to flush into the system, and then their big boys just offload it all into retail, while retail's, you know, trying to buy all the tulips up in the bubble stage. They offload to them. That's when they get Kramer on there and say, hey, you need to tell them to buy everything so we can offload it to them. And that's probably what Kramer does for the most part, is helps his buddies out and makes them some cash on the side. But, you know, at this stage, I just hold on. And if we get a pullback, that's okay. If we don't, you know, that's okay too. Do you guys have any questions to ask? If you had anything? Uh-oh, Scott's got something.
Well, this is exactly what you're talking about, Andy, which is this is a Fed funds rate. So the crash doesn't normally happen when the Fed's tightening. Well, actually, it's never happened in history. So if you look at this.
Sorry, I have to laugh. I'm sorry, because there was people that we had on earlier that said that because we're raising interest rates, the market's just going to instantaneously disintegrate. And I was like, no, this is like this is like moving the Titanic. You can't just turn around when you're moving the other direction. So
it usually crashes when the Fed is loosening their monetary policy, because they know it's coming, and so they start to flatten out in terms of the interest rates, and then they loosen. So what happened here is you've had tightening here, stock market went up, and then they flattened the rates here, so it started declining a little bit, and then boom, when they started lowering rates, that's when there was that 2002 crash in Dow Jones. So same in 2004. Started raising rates, it flattened, did nothing for years, went up, had a final blow off top. And then when they started lowering rates, notice that they started lowering rates before the market crashed in 2008. When they started lowering rates, the market fell. So same here. They started raising rates here. It was flat, did nothing for years, and then had a blow off top. And then when they started reducing rates, we had a mini crash, the COVID crash. Yep. Well, now they started raising rates. What I'm thinking is we're going to flatten out here. It could the flattening out range, the range bound action could be quite large. So it could be like a big range that we trade in or something like that. And what I'm thinking is, if history is guide, then we might even have a blow off top in the stock markets. I'm not calling for, maybe not in Nasdaq. Nasdaq's very much overvalued. But if I'm just looking at Dow Jones Industrial Average, for example, we could have a blow off top before everything comes crashing down, before the Fed starts lowering rates again, because they see some signs behind the scenes. Because you've got to remember, I think one thing that's going to really drive down the liquidity in the system is the delinquency rates. Because if you think about the supply of money and the liquidity in the system, it's all driven by the loans, right? Well, mostly driven by the loans. It's not the Fed printing money. Obviously, it has an input. Fed tightening does have an input into it. But if you think about the growth of money, it's driven by commercial banks loaning it out for people to buy houses, mainly, because that's 70% of their loans. People to buy houses, people to purchase shares, people to take consumer loans or whatever it might be. That's what drives liquidity in the system. We're not seeing draining of that liquidity out of the system yet, because loans are growing, delinquency rates are still low, which means the total loans are right now in net growth. It's not experiencing negative growth in loans. So it's still an expansionary phase within this economic cycle is what I'm thinking. So I think that once you understand that, you could probably understand why, the stock markets might not crash. And even more sure of a bet is if the liquidity in the system is constant, let's say it doesn't even grow. Let's say it just stays constant, right? That money, once you start, the Fed is basically telling everyone, sell your bonds, sell your mortgage-backed securities, sell your treasury bonds, is exactly what the Fed is telling everyone to do right now, because they're saying we're going to start QT, which means they're going to let the bonds mature and roll off their balance sheet, right? So if you look at mortgage-backed securities, Oh, no, this is not it. Sorry, I forget the code for it, but let's just look at the treasury bonds, right? TLT. Like that's what you're seeing in TLT right now, because Fed is basically telling them we're not going to be we're not going to be a large purchaser of treasury bonds anymore. So everyone's trying to front run the Fed. Everyone's getting out of bonds right now because they're trying to front run the Fed because they know that they're not going to get the price support from the Fed. And so that money, if the amount of money in the system is constant and money is flowing out of the biggest sector, one of the biggest sector within the economy, which is the bond market, that money has to find another place to go. And what is the most undervalued sector? What are we in need of the most right now? It's energy, it's commodities. So for me, this is like almost a no-brainer. I just don't see what others are seeing that makes them believe that commodity is going to have a downturn, because all I'm looking at is, okay, the liquidity in the system is pretty much constant. It's still growing because we're not seeing the rise in delinquency rates. So the money is still growing within the economy. Money is flowing out of the biggest sectors, your NASDAQ stocks, your bonds, mortgage-backed securities. If you look at the mortgage-backed securities ETF, it looks similar to this. If you look at the treasury bonds, if you look at the corporate bonds, which are the biggest bond markets, right? The biggest bond markets are your mortgage-backed securities, US Treasury bills, and corporate bonds. All those bonds are selling off. So where are they going to go? So to me, I don't really see a liquidity event.
They're going to go into the stocks that I purchased, hopefully. That's what I hope. I mean,
I think so.
No, I agree though. I think, and remember, it's got to be delayed about 1.5 years, 2 years from when all these loans come into the system, because it takes about that amount of time to work its way through the inflation figures. So I still think that we've got a good amount of time before the inflation gets to a level that's super low and money stops rotating throughout the different sectors. But yeah, you're completely right with bonds rotating out, and if that money's got to go somewhere, it's good. It has to travel through the dollar too. So you might see dollar strengthening, and then all of a sudden dollar weakening as it gets deployed into the sectors that we talk about all the time. So, do you guys have anything else to talk about? Nothing else. All right, we'll end it there. This is Sow N Reap Capital with
I
me.
do have another.
Oh, he's got one.
There we go.
So this is household and non-profit organizations, checkable deposits and currency asset level, right? So I think this is also an important thing that we need to be looking at, because everyone talks about the savings rate and how everyone lets money right now. But if you look at this, what is this showing you?
That their assets are exploding is what it's showing us.
Yeah. So this is, I mean, everyone talks about, like the credit cards and all those things, but this is ammo that they have in their pocket right now. If you look at the 2008 financial crisis, the reason why we had such a high delinquency rate was because people were running out of money in their bank accounts. Right now, I don't care what the savings rate tells us. I don't care that we've seen a decline in the savings rate, because we've had massive savings rate, for the last 2 years, which builds up their ammo, which is what this is showing. So this is all the money waiting on the sidelines. So what do you think people will do when they see commodity prices rising, when they see continued inflation in energy and food prices? What are they going to do with this extra money that they've got? This money in savings will rotate into commodities. Like, I mean, if you think about this is actually a pretty large sum of money as well. This is total is $4 trillion in these households and non-profit organized checkable deposits and currency. That's not small, because I think US Treasury bond market combined, I think, is somewhere between 10 and $15 trillion in total. I think it's closer to probably 15 trillion right now. Last time I checked, it was like something like 14 trillion. But your mortgage-backed security is like something like $9 or $10 trillion right now as well. So if you look at it in those, and obviously gold is a lot less than this. You know that the uranium market is not even 40 billion right now. So this stuff, when they see inflation, they will seek protection from inflation. and they will flow into commodities as well, not just from the bond market, but from all the checkable deposits that they've got held with the bank accounts. So you're talking about money flowing from not just bonds, general equities, and real estate potentially, but you're also talking about money that's waiting on the sidelines, waiting for, I guess, the markets to settle down, waiting for markets to stabilize, and potentially this money can also flow into commodities as well. So I don't know how you can.
That's our FOMO money that's going to be coming. The fear of missing out money.
Yep.
Yeah, that's it. That's it.
All right. Well, I mean, that's all I've got. I don't know. I think that's what everyone's got. So thanks, guys, for coming on to the channel, Steve and Scott. If you guys want to check out their channel, it's Sow N Reap Capital. And then if you want to check them out on Twitter, I know we've got our Twitter names or things above us. And then Steve, you can find Steve on Twitter as well. I think I can't remember your sign. Is it
Silver Crisis 405. Yeah, it's fine.
Okay. Oh, there we go. Silver Crisis. Who's turned into the biggest uranium bull? I'm just messing.
Yeah. Yep.
All right. So that's all we've got. And we'll catch you next time. Thanks, guys, for coming on. Appreciate it.
Thank you.
Thank you.